Greetings and welcome to a conversation on COVID and development here at the Center for Global Development. Today I'm both privileged and pleased to have with us Ambroise Fayolle, who's the Vice President at the European Investment Bank and brings with him a long and distinguished career, both working in his own country but also in a number of international institutions. And in the interest of full disclosure, I should point out that Ambroise and I have been friends for many, many years and have had also the opportunity to work together as colleagues in the international institutions. So, Ambroise, welcome and we're really happy you could join us.
One of our friends was also, unfortunately, passed away a few years ago, but he was a dear friend to both of us.
Yes, indeed. And actually, more than a friend to me, he was really a mentor to me in many, many ways, Yves Rovhani, that we're talking about. Ambroise, I thought we might start by talking a little bit about EIB's appreciation now of how the COVID crisis is affecting its membership. And I think you have a unique perspective amongst all the development institutions that I've had an opportunity to talk with, because you work both within the European Union and outside it as well. So you have lessons to learn from what's been happening in Europe, where the crisis actually come before. The pandemic came in earlier. And now we look at Africa, and I think many people fear that the worst of the pandemic is still ahead of us in Africa. So there are lessons we can draw upon from how Europe handled it, and you are interacting with a lot of countries and with a lot of partners. And I wanted to start off by getting a little bit your sense of how you see this playing out and any general conclusions that you've been able to draw so far.
Well, thanks a lot, Masoud. Very pleased to see you and welcome to everybody. I will start by saying that what is important is to learn lessons from the past. And there are things that we have learned from the previous crisis, which in many ways is very different from this crisis, but in many ways had the same kind of risk for the real economy. And what we have learned in Europe from the previous crisis is, one, that you need to act quickly. And second, that there is a big risk on investment. And that the loss of revenues that comes with a crisis of this magnitude, and this is indeed unprecedented, has the potential to imply big drops in investments. The last crisis in Europe resulted in a drop in 15% of investment, and our economists at the economic department of EIB tell us that the risk on investment, if we don't act quickly, is even bigger this time. So, having in mind these two lessons that we learned from the past, I think the Europeans, and in Europe things move always in ways that go little by little, but it has been quite quick in making decisions. And we tried to, again, learn the lessons from the past in doing two things at the same time. The first one is, let us, and we are, a big multilateral institution, so let us try to act quickly by not creating new instruments that need time to be in place, but by using existing instruments, accelerating disbursements, putting in place new commitments, in particular SMEs, but not creating new instruments at the beginning because we know that this will take time to be in place. And that's what we have done. So we have increased the disbursements. We have increased the, what all institutions, national and multilateral, have done. There were requests for example, from companies for forbearance, for just deferral of payments. This is something that we have obviously contributed as much as we could to help these companies in trouble. And we have increased the volume, and this was a decision by the European Council already in April, the volumes of our activity to support especially SMEs. Because in Europe, in the world actually in general, SMEs are the key part of the real economy. And then what we have done is to work with member states, with the European Commission, with our partners, to put in place a sort of big guarantee instrument that would, and this now has, this is in place. This is a 25 euro guarantee fund. So 25 billion euros is a lot of money from member states, from participating members of the European Union, which are our shareholders at EIB, and they will contribute to guarantee up to 200 billion euros of financing to the real economy, and in particular, the first target is SMEs. And that is, so just to give you a figure, because figures are 1.5% of the GDP of Europe.
Right.
So it is significant, and it will be implemented in the second half of 2020 and in 2021. So these are the big elements that we have put in place to support the real economy in Europe, together with our contribution, because development is a big part of our activity, to Team Europe, outside of the EU. Actually outside of the EU, but maybe we will come back. We have tried to do the same thing as inside the EU. Quick response, increased volumes, and participating to the debt service suspension initiative of the G20.
Right. So clearly in Europe, you've had a big response in terms of scaling up your financing, in terms of making use of existing instruments to be able to do it quickly, and also coming up with this guarantee instrument that should enable you to do 200 billion euros worth of guarantees, a lot of it to SMEs, and hopefully this will not just keep the enterprises going during a difficult period by providing them with sort of short-term cash flow that they need, but it will also mitigate or limit the bit that fall in investment that would otherwise happen.
Exactly.
And now I think it would be useful to sort of say, well, of course you have a role outside Europe in developing countries, particularly in Africa. And I want to get a sense of how much of this same approach and speed, if you like, is transferable to what you're also doing outside of Europe, and maybe talk a little bit about what you've been able to do there and how you see that, but also how what's happening in the rest of the world, and particularly in Africa, is different in a way from what's been happening in Europe.
It is different, and it is not that much different. I mean, what you have learned with the recent big challenges to the world, climate change is clearly one. The pandemic is clearly one as well. It's that these are challenges that are not only for part of the world. These are challenges that are global, and the pandemic is global, unfortunately. And so, yes, the economies are very different, but we applied actually the same, I would say, the same processes. So try to actually, just to give you in a nutshell, we do 90% of our activity within the European Union, and we do 10% outside of the European Union. But since we are a big institution, 10% is already something which is 7 and 8 billion euros every year. And out of that, last year, just broad figures to put things into perspective, we have done 3 billion loans in Africa, half North Africa, half Sub-Saharan Africa, and a bit more for the private sector than for public sector. I say that because often we are presented as an institution that is only active in the public sector. Actually, this is not true anymore, and we have changed our approach at the request of the member states of the European Union, who wanted us to be more active in supporting the real economy. The SMEs, digitalization. Actually, we are about to issue a broad survey that we have done with UNDP on digitalization needs in Africa. So Africa has become a priority, and has become a priority, but we'll come back later for that on climate as well. So what we have done is to try to do what we have done with our partners in Europe. We have tried to work with our partners, financing partners first. The same way we have worked in Europe with national promotional institutions, with public banks, with the European Commission, with all institutions that are active, the financial intermediaries. In Europe, we have done the same thing for outside Europe. Work with the European Commission, and clearly, I am in very regular discussion with my friend Condones at the European Commission in DEFCO. We have developed our relationship with DG NEAR. So the European Commission, the bilateral agencies, the big institutions that are active in Africa, for example, like KfW, like AFD, also the smaller ones like Sofit from Portugal. We have, and of course, our partners from the Multilateral Development Group. And we are a member of this group, and we have been quite active in discussion with the World Bank, with the African Development Bank, and with other partners. So what we have done is the same thing as in Europe in terms of intentions. We have, for example, since the beginning of the year, it is interesting because what you see in our role in Africa is that compared with a normal year, there are more approvals of projects by our board. There are less signatures, and there are more disbursements. So what does that mean? It means that the objective to increase volumes is there. And that's why you have more approvals by our board, and our board has supported this approach. You have less signatures because, to move from approvals to signatures needs a few months. We try to make it quick, but of course, it needs time, especially if you have increased the volumes of approvals. And you have more disbursement because we have clearly wanted to increase the volumes that would support the real economy in Africa. We have also developed the links that we have with a few financial intermediaries in Africa. And just to give you two names, we have very big programs with Afreximbank, for example, or with TBD in Eastern Africa. This kind of institution that have been active, and that is something that we intend to support further. And we have worked with countries and to support again two elements, the same as in Europe. The first one is the real economy and in particular SMEs, and the second one is the health sector. We wanted to provide, for example, to finance projects to health preparedness. We've done that together with the World Health Organization. We've worked a lot with UNECA and of course with other institutions in in Africa, and I will sign in the next days a project that we have done in Senegal for this one. So health preparedness. There are projects, and we have one that is quite interesting also in Senegal on trying to have either testing or even a vaccine that is adapted also to the needs of people in Africa. So all this is the same objective that we have had for this pandemic, but I think it's also a good answer to the fact that the pandemic is global, that the needs are global, and that's why we try to have a big impact with our response to the COVID crisis in Africa. And again, we are not alone. We are here dealing with colleagues trying to do our best to help the economies in Africa.
In terms of the financing, clearly one of the issues right now is that many countries in Africa are saying that while there are a lot of institutions are talking about big numbers on commitments, they have not seen actually cash flowing. And the fact that your disbursements have gone up is I think, a very positive sign. On the other side of this, of course, is repayments. And you mentioned the DSSI, the Debt Service Suspension Initiative, the G20 had agreed for the poorest countries. How is the EIB relating to that initiative?
So, as a multilateral institution, as a multilateral development bank, we have very carefully listened to what the G20 members said. And we discussed that extensively with our colleagues in other institutions. And the conclusion we have come to is that the most useful way for MDBs to support the debt service in African countries, in poor countries, is to do what we are best at, which is to provide new financing at low cost. And this is the usual. I've been in a previous life involved very much in Paris Club discussions, and this is the traditional way for multilateral institutions. That we are the ones when people get away because there are tensions, the situation is getting worse. We are the ones who are staying and continuing and increasing our commitments. And that's for us the best way to help. And if you want an example, we have actually in recent years increased our activity in least developed countries. It was not a traditional part of EIB activity, to be frank. We were more active in more advanced economies, including outside of the EU. But we have developed that. If you want an example of us as an institution, and what I say is true for all institutions that have subscribed to the answer from MDBs on the request from the G20. We have a low actually debt service from the least developed countries that are eligible, and the AIDA only countries that are eligible to the DSSI. We have a debt service that is, let's say, 200 million euros in 2020 and 200 million in 2021. So this is where you see that there is this takeoff.
This is for EIB you're talking about now. EIB has 200 million, yes, yeah.
And what we intend to develop in terms of new lending in these countries is 2 billion euros in 2020. So 10 times, more than 10 times actually, the level of debt service. And it is both for principal and interest. So what I say is there is a change in scale of what we intend to do for the poorest countries, which is a change in the way we operate in Africa. And I have to thank the teams of EIB because that that means a huge amount of work for an institution. And at the same time, I think we are really answering the need that has been identified by the G20.
I have personally also taken the view in the writing that I'm doing that for the MDBs and for the IFIs, because I think the same thing in a way applies to the IMF, the more effective way of contributing is by scaling up new financing, in part because the time it will take to reach agreement on a suspension of debt service amongst all the shareholders of these institutions will be much longer and a more complicated process to get there. And also because I think there's a legitimate concern that MDBs have that because they borrow on the market, if they go down this road, it could affect their the price at which they can, the terms on which they can borrow. I think sometimes maybe the problem isn't quite as enormous as people make out, but it is a legitimate concern. So, but the test of that argument, the validity of it, really rests then on the numbers. If the MDBs are able to demonstrate that they are indeed putting out much larger sums in a net way into the countries, new money, then I think the argument holds much more. The less confidently we can assert that, the harder it is to defend that line, because then people can legitimately say, look, it would be just easier to get on with suspending debt relief. And I think the numbers you've just given, I mean, I'm assuming from that if you were to look at the first 3 months of since the beginning of April, since when the G20 came up with it, say to the end of June, given the scale you're talking about, the EIB is a net positive contributor to the low-income countries, and that will certainly be even more so the case in the remaining 6 months of the year. And I think that kind of information made public by all the MDBs on a timely basis would very much help to reinforce and underpin the position that you and your colleagues have taken. I wanted to move a little bit. Sorry, go ahead, Ambroise. You're going to say something on that.
I'm just supporting 100% what you say.
I wanted to move a little bit from there to another issue, which is, EIB and President Hoyer himself have been very proactive in talking about the climate emergency that the world faces, and the fact that this is an issue not just for Europe, but also for Africa. And a big part of the EIB agenda has been to sort of think of how it can help promote work, investments, policies that are tackling climate change. And in a way, you even sort of often talk about yourselves as the climate bank in a way. And I want to get a little bit, how do you see that agenda now? You mentioned at the beginning of this that investments could drop by 15% in Europe, and there's a risk that investments will drop by some number that's not all that much smaller in poorer countries, because they're going to be even more strapped for cash. And of course, when investments drop, and a lot of the public spending that's now happening is to shore up incomes and to keep businesses going in the meantime, not for new investments, then an opportunity for green investments, for making infrastructure more climate friendly, becomes harder. And right now, everyone is focused on the pandemic, and then we'll be talking about global health security. How do you see the climate change agenda in Europe, in Africa, and as a result, in terms of your own activities at EIB?
I mean, it is very interesting when you listen to the leaders in Europe, to the leaders of the European Commission, starting with President von der Leyen and Vice President Timmermans, to the people in the civil society, and you see that the need to keep the objective of climate change is and remain the key priority. And I think there are many reasons for that. The first reason is because we know that the risks on the economy are big if we are not able to change our policies towards climate. We cannot afford to have 2, 3, 4 degrees more than what we have in a few decades, because the impact on the economy will be terrible. And I'm not talking about the impact it would have in Africa. And I'm pretty sure that when you look about innovation, when you look about impact on jobs, climate remains a key investment sector. We will need big innovation on, for example, hydrogen. There is a big initiative in Europe about which is called the Battery Alliance. All these are very, very big initiatives that are going to make the competitiveness of the industry tomorrow also. And this is something that, for me, this is a very important element of why it makes sense also from an economic perspective, not only from the society and environment, from the competitiveness of European companies to invest in green projects. But it makes sense also in terms of jobs. You know, a big part of what we are going to invest, and I'll come back to which are our commitments, will be energy efficiency. A big retrofit of private and public houses, for example. And here, what we do has a big content of jobs and a big content of local jobs. You know, when you retrofit your home, the people who come don't come from 1,000 miles from where you live. They are in the neighborhood. So from the jobs also perspective, we think that it is very win-win to have a big climate agenda. And what I find interesting is that, of course, you know, in March, April, the key priority was and remains to a large extent to help those SMEs who have suffered big liquidity shock. But all the leaders in Europe, and if you ask my colleagues and President Hoyer, all will continue to say the climate agenda is the priority for Europe, and it will stay so. And if you read the conclusions of the big agreement that has just been announced by the European leaders after a few days of tough negotiations, is that the target keeping climate agenda as a key agenda for Europe remains there. And so that's how we see things. Now, I would say one thing, or maybe two things that are interesting from not only from the project perspective, but from, let's say, the funding side. I am personally convinced, maybe I'm wrong, but I am personally convinced that the move towards climate projects will come sooner than we think, because investors are going to ask for it. Because at some stage, and you see that already, ESG is becoming more and more important for investment. You need to, and especially young investors, they say, well, we want to know where we invest and what for. And also you have more and more investors telling us, well, we want to invest in energy projects, but are we sure we are not going to be stuck with stranded assets in a few years?
Yes.
And if we are invested in in assets that are not attractive enough anymore because they are considered not compatible with the climate objective, then what are these investments worth? So that's the first thing. I think it's going to come sooner than later, and we have been very active in developing, for example, we were the first institution, I was not there at the time, but we are the first institution to launch a green bond. And actually the green bond in the first green bond, and we have developed many since then, was not called a green bond by EIB. It was called, and I think this is interesting, climate awareness bond. And we have developed this, and in recent years, we have developed also what we call sustainable awareness bonds, for example, to support outside of the EU projects targeting water projects, so environment. The second thing that I wanted to say is when you look at, I said at the beginning of our conversation, the global challenges. And climate is a global challenge. It is not, affecting only the advanced economies in Europe. This is not true. And our friends in Africa know it pretty well, unfortunately. But what is true is that green bonds are very much in advanced economies. So to give you an example, because we think that this is where a multilateral institution is worth at, and to create an efficient market, to try to develop new ideas that could be supported by the market. So we have worked with IFC and with EBRD and with Amundi, a big asset manager in Europe. The idea was, how could we give an incentive for financial institutions in emerging and developing markets to issue green bonds? Because they are not very much active in this sector. And we see that this is becoming a bigger and bigger sector in Europe and in other parts of the world. So what we have decided to do in this fund that was created is, well, to give an incentive to help the market develop. What we're going to do is to buy bonds that will be issued by financial institutions in emerging and developing countries, so that they have the incentive to develop this kind of bonds and to make sure that we are not greenwashing, to use the kind of technical support so that indeed the means of reporting or financing really green projects will be also in place.
There's
and
some
we think this is
assurance.
where we can be very, very active. Now, in a nutshell, Masoud, what we do at EIB and what we are going to, what we are keeping, and the objectives are clearly there for our governors. We have a new LNG lending policy that has been put in place end of last year, where we have decided to stop financing fossil fuel projects by end 2021. So this was, there has been a big discussion also at our board. It was very widely supported, and I think it is very important also as a signal. What we have decided also is to increase by 2025, and 2025 for an institution like us is tomorrow, to increase the size of what we finance in green projects from 25% currently to 50%. So it means, basically, let's say we do year on year 60 billion euros projects. So we have an objective of 15 billion now. We need to be at 30 billion in 2025. So it's a big increase for us, and that will be a key objective for the bank. And the last object, and of course, as a multilateral institution, as a public institution, our objective is to bring private other investors, and in particular private investors, so that we can significantly increase the size of investment in green. And the last objective that we have is by end 2020 to have a strategy that will allow EIB to be 100% Paris aligned. And it relates to the big debate that we have on the taxonomy, because okay, we have 50% climate projects, that's fine, but if the 50 other percent are harming reaching the targets of Paris, it's useless. But it means that we need, and that's what we are doing now, and we have already actually launched a consultation outside of the institution to get the views of NGOs, of private sector, etc. What does that mean for transport policy, for example? What does that mean for investment in roads, in airports, which was, infrastructure is a big part of our activity. So this is the kind of objective that we want to achieve. We want to be the climate bank of the EU. We think that this is a very important objective for us, and we think that this is a role that we will have both within the European Union and outside.
Yeah, look, I think all that is quite heartening, Ambroise, because right now there is a lot of concern that one of the side effects or consequences of the focus on this crisis is that climate agenda is going to be put back, not just during this year when everyone is focused, but in a longer term way. And I think you're right to remind us that it remains very much front and center in the political conversation, the political declarations of European leaders and your own agenda is that. And I also agree with you that in a way, I'm personally never quite sure what we mean by a percentage of the portfolio as being sort of climate compatible, because it almost implies that the remainder of the portfolio is not compatible, which clearly doesn't make any sense at all. To my mind, 100% of the portfolio of the development banks needs to be climate compatible, and then some part of that can be more directly focused on green projects, and the remainder has to basically meet some basic test of being compatible with not making things worse, and for the reasons that you mentioned, So
this is where, Masud, this is where the principle of do not harm is key.
Exactly, and I think when people say we're going to do 30%, we're going to go from 15 to 30%, Paris compatible projects, Paris Agreement compatible. I always answer by. And therefore, what about the other bit? So it doesn't make any sense. So I think that's a good way to look at it. Maybe I want to end, Ambroise, by just getting a little bit your sense on, Europe is a huge player in the global development agenda, both in terms of helping to shape the global dialogue on development cooperation, in terms of being the largest financier of development, if you put all the European Union countries together, and even individually, European countries are, amongst the top contributors, and the European community institutions are big contributors, including yourselves. There is a sort of ongoing conversation in Europe about how to think about the relationship of the national and community level institutions in the organization of Europe's development partnerships. Should it be how much? And a year ago, there was sort of wise persons group that was created looking at European level institutions on development finance. There's a lot of rethinking of the role of the Commission in terms of the European level finance. And then, of course, there are big national institutions in France, in Germany, and in other countries which have a big role. In all this, how do you see sort of EIB's role as part of that broader agenda? And do you have any thoughts on sort of what should be the principles that guide the way we think about the relationship between the national and the community level delivery of development cooperation?
I mean, it is a very, very good question and a very difficult one. And very difficult for me also because, this is a question that has been presented to the political leaders. And it's going to be up to them to decide what they want in terms of architecture of development institutions. But what I would say is from me, how I see that with also my past experiences at the World Bank, at the French Treasury, at the IMF for 10 years, is I would say the following. I think you need to distinguish two dimensions. The first dimension is the dimension that is practical one. And in practical terms, what we need to develop more and more is cooperation, coordination, work together in the field, in meetings at the top level between all institutions, etc. And I think this has evolved in a good direction within the group of multilateral development banks, with our friends from bilateral agencies, with our friends from financial institutions which are not public, etc., etc. So we need to do more and more. We are never actually doing projects alone. We are always co-financing with other institutions. And I think what you have seen in the recent past is a welcome development between institutions for the good of the beneficiaries of projects that we all finance. And I think that's something that is very much welcome. And there is another part that is maybe more for Europeans. And sorry to say that but as a European, I think the question that was asked by the wise persons group is the right one. The European taxpayer is financing most of development aid in the world, and be it for national institutions national budgets or European budgets, or through their support to global institutions like the World Bank or others. And it is true that you don't have the feeling that these big amounts of money that are provided by the European taxpayers to benefit development are reflected in visibility of Europe as a key development institution. And I think that's a fair question, and that's a question that we need to ask ourselves. How can we be more serving the interest of the Europeans in developing European projects? So I'm not going to say where we're going to end up. I'm just saying that for us, as the Bank of the European Union, we are very much willing to increase our role outside of the EU, because we think this would be very good for developing good projects in the interest of the European citizens. Thank you.
Yeah, absolutely. I think you can help to pose the issues in a way and how we can think about them. But at the end of the day, I think that this question very much becomes a question for political leaders of Europe to think through and take a view on. So we will watch that space. And Ambroise, Fayolle, I want to thank you for taking the time. It's always a pleasure to talk with you, Ambroise, and I want to say how much we appreciate your participating in our conversation today.
Thank you so much, Masoud, and a pleasure to be with you, as always. Thank you.